Hello, fellow traders. Have you ever wondered why your trading strategy is failing? Let's get rid of the risk disclaimer. Don't forget, most traders lose money. Normally the case. Hope you're all well. It's Coffee with Rob, so you might as well have some coffee. Hope you got your coffee and your tea ready, and you're ready for the long show today. How's it, Elaine? Good to see you. Let's go and have a look here. What shall we look at today? Let's go and see how the market's been going in general. We'll have a look at this one. Brent crude oil is still on the downside, not really going up. US 500 should be, it's starting to fall over, which is never the best news. Gold is still on the up. New Zealand dollar, US dollar. Yes, that is short. Was expecting that. JAP 225. Euro, US dollar is still long. Let's just have a look at that one. So we've got a trade on that here. Yeah, that is still going strong. That one's looking good. Hi, Tywell. Welcome to the show. Good to see you. Let's go and have a look at the other charts that people can see better, because I do believe that someone mentioned they were struggling to see the other charts, which is why I put these charts up a bit. Okay, so let's see what's happening on the US 500. Okay, so it broke out, heading up, coming back to retest again. Will it continue on up? Well, remains to be seen. We'll see how it goes, see how it works out. It's a little bit iffy, let's say. Gold, on the other hand, gold's doing pretty good. It's shot up, staying on the upside. And what I did on the other charts earlier is I put a little trend here just to make sure that it doesn't fall back down. But it has broken past the prior high. It is going to the upside. Bit of a correction here, but it looks like it's on the up. The bad one on this account is the usual United States dollar SA rand. I've had this for a while now, and it's still not going in my favor. It goes green and then it goes red again. So not looking great now. It looks like it's below that level, and it looks like it wants to actually go the other way. So we'll see how she goes. Fundamentally, I just don't see how that trade can do well, in all fairness. Okay, what can you guys tell me? How's it, FX Trader? What can you guys tell me about your week and how it's gone and where it's been? Brent crude oil, I've drawn that red line there just in case it gets down to that. But as far as I'm concerned, I'm just waiting for a trade on this. I'm just looking for a trade on this now. Markets are alive, so that's now moved. That's now moved. So this is now a trend. Yeah, there she goes. But I'll wait for it to get past the high and see how she goes. Waiting for a decent long trade on there. I'll talk to you guys today about why your strategy fails sometimes, why your system fails sometimes. And effectively, it's not the charts, it's not the strategy, it's you. And we'll get to that. Morning, Ramford. Welcome. Good to see you. There's some people on board. So why does your strategy fail you sometimes? Why does it let you down? What goes wrong? What causes it all at the end of the day? Well, one of the biggest issues is not being able to ride the trades out. This is one of the big things that we see in the markets, because the fear when trading gives you quite a headache. So if you have a trade in place and you see it going to profit and you think, ooh, this one's in profit. Now you've got a target. Your target's on this one, 329. Your target's there and you actually $83 in profit. So you think to yourself, got to take that profit, got to get out. And then you take that profit and off you go. Or just goes into loss. Let's say it goes into loss, and that's a good example on the other side. Let's just pop over to the other charts here. And there's a good example of a loss. So it goes into loss. It goes into $97 loss in this one's case. And you think to yourself, oh, man, this thing's in a loss. You're targeting 436. Your stop loss is at 243. Now, on this particular one, you could actually say, I need to get out of this because it's going bad. even though it's out of plan, and then take a minimal loss and move on. But what most people do, rather than doing that, is they'll double up on this trade or dollar cost average it. In other words, you've got a trade that's, how many lots are on this trade? I don't even know. Positions. So you've got a trade that's got 0.1 size, okay? So what you do is you go and make it a 0.2 size because you believe now, for some other unknown phenomenal reason, that if you double up on this trade, then your loss will be negated, and this will only have to go up halfway to make that money back, and then you'll be back in zero and you'll be able to get out of the trade with no loss. Because for some other unknown reason, traders have this great feeling that they shouldn't be taking any losses whatsoever, and they should have some kind of 100% win rate, which always interests me. Always. It always makes me think, where did you come up with that idea? So what you got to be careful of is that exact scenario. And also, when you're taking profit, you don't want to get out your profits early. And the reason for that is you want to make more on the profits. You don't want to make less on the profits and make more losses. You don't want to make bigger losses. So what's going to happen is on the other one, you're going to take a huge loss, and on this one, you're going to make a small win. And at the end of the day, you're just not going to come out with a bank balance at the end of the day. You'll have a win rate, but you won't have a win. And that's always the issue. And that's why your strategy is not working for you, is because you're not able to be patient. You're not able to sit on your hands. The other thing that happens is you're sitting here looking at this dead chart, and you're thinking, wow, this is seriously boring. So what do? You drop it down to the 5-minute chart. Oh, that's a lot more exciting. Look at that. It's moving. Let's trade on the 5-minute charts because that's actually got some movement on it. And you start trading on that, and you achieve a few successes, because you will. I mean, I'll achieve some success here if I want to scalp. I'll take a few points off of this quite easily. But you never look at the losing side. You never think about how it can go wrong for you, which it normally does. And then you end up on the losing side of the trade. So these are the reasons your strategy doesn't work. It's not actually the strategy. It's actually you at the end of the day. Now, one of the new things that I see around the internet at the moment, or on YouTube, let's call it what it is, it's on YouTube, is a new strategy that people are pushing out there for some other reason. That's called the ORB, the opening range breakout. Opening range breakout. It's a new thing. So what they're doing is saying, when the market opens, that first candle, if it goes above the high, you take the trade. If it goes above the low, you take the sell. And on looking at that, it's just the same as saying it breaks past the prior high, or it breaks out, or whatever the case. It's not going to make any difference. It's not going to make your trade any better than 50-50. In fact, that's more like flipping a coin than any of the other systems that are out there. And it's become quite popular. I see the guys are getting into it. I had a look at it, and I have to say that it actually loses most of the trades rather than winning them. So that's not going to help you guys. Don't go and get involved in that. That's not going to be another magic bullet. I've seen it all over the place. The people are calling it, and it doesn't work. It really doesn't work. I mean, you're basing your whole trade, your entire trade, on one candlestick that opens at the open. So I wouldn't know which one was the open here, but if that was the open, and then it goes above that, and then you take the long trade, and it goes up, and then you win. Something to that effect. But it doesn't always work. Sometimes it fakes out. What it does is, let's say that was the first candle, and it shoots down, and then you take the short, and it shoots back up, and it goes the other way. That often happens in more cases than you think. It'll sort of go the wrong way when it opens, and then go the right way soon after that. So that will catch you out on a number of occasions. So the ORB strategy, as they call it, does not work. If anybody's using it and they feel that it does work, let me know. But I don't believe that can work for you. Well, it's not a strategy, it's a system. Guys, just don't get this wrong. The lines are like a system. They're like a place where you can go and get a high probability trade. They're a place where you can go and place a trade and manage your trade and position your trade. The strategy is the thing that's completely separate to the chart. So I always tell you guys that. It's just wording, guys, but I'm just trying to say to you, try and separate the two. Try and separate business plan from taking a trade. Taking a trade is just, there you go, there's a trade, take a trade, have a look at the charts, see which way it's going to go, toss a coin. Is it going up? Is it going down? It can only go one way or the other. And but then the important part is to actually manage the trade. I had somebody comment to me the other day, fantastic comment, where he said, I've actually adopted your strategy, I've adopted your system and everything. The only difference is I now toss a coin when I take a trade and decide which way it's going to go. And that works for him. It's exactly the same thing. I agree with him totally, 100%. That's all it is. Toss a coin, see which way it's going to go, and then manage the trade. Because that's all you can do. You see, the charts can't predict which way the market's going to go. No chart can predict which way the market's going to go. The only person who can predict to you which way the market's going to go is someone with insider trading information, which is completely illegal, so you'll never get that information, whatever the situation. So at the end of the day, if you're looking at a chart and thinking it's going to predict which way the market's going to go, it's a form of insanity that we have. You know, we think by looking at a chart, we're somehow going to figure out which way things are going to go. But we never do. We never do. And it's 50-50. And that's why your trading strategy is failing, your trading systems are failing. You found yourself in that never-ending cycle of doom, I'm sure. The never-ending cycle of doom, as I call it, where you pick a system to trade on and you say, I'm going to use this system. I'm going to use trend lines, support and resistance, and I'm going to trade with that, moving average crossovers, whatever the situation. And that's the only way I'm going to trade. And then it starts failing on you because, you know, your system or strategy is failing. That's why you're wondering what's going on. And then you move to the next strategy and your system, the next shiny thing that you find that someone out there told you about. Morning, David. And they find out that you find out that there's this new fandangled system like the ORB strategy, for example, and then you try that out. And after 3 or 4 trades, that starts failing. So you think, oh, that's not working either. So you move on to the next strategy. You find the MACD system and you move on to that. And then that starts failing after a while, after a few wins. Then you move on to another strategy. And then you end up back where you started. It's the never-ending cycle of doom. Constantly looking for that shiny thing in the market. Not realizing that the charts aren't making you the money. The charts are not making you any money whatsoever. All the charts are doing for you is giving you a position to trade on. That's always the issue with people learning to trade. You get caught up in all the shiny things. You get caught up in all the candles and charts and all the fancy screens and monitors and things. It's not about that, guys. You can trade on a phone, on a laptop. You don't need all the fancy screens, all the fancy charts and all that. Really, you don't. As FX Trader says, sticking to the rules and having patience is the hard part. That's the hard part of trading. You know, the easiest part of trading, insanely enough, the easiest part of trading is learning how to trade on the lines, learning a system. It takes you a couple of hours to learn a system. It takes you maybe a week to figure out the best way to trade that system. The difficult part is maintaining your strategy. The difficult part is maintaining your fear, maintaining your patience, and working around it the right way. That's the difficult part. Now, I have a question here. Do you use fundamentals? I've had this question quite often, and I don't mind answering it because it's not a one-answer question. You see, do you trade 100% technical, or do you trade 50% technical and 50% fundamentals? Do you trade 100% fundamentally? You know, there's all these things. There's a lot of moving parts when it comes to trading. Now, what you have to figure out for yourself is what's important to you and what works for you. So I know traders, I know insanely good traders that will only use a chart technical. They're not interested in 1 ounce of the news. only look at the chart. And it works for them. And then I know traders that only use fundamentals. They don't even want to see a chart. Don't show them a chart and be like, "What? Why are you even showing me this? I don't want to see this. Not interested. I only trade on fundamentals." Now, a good example of this is myself. I only invest on fundamentals. For example, if I invest in a company and I want to buy shares in that company, I only look at it from a fundamental basis. I really literally don't care where the chart is. I really don't. So if I'm investing in a company, I'm not going to sit and wait for weeks on end for the chart to correct or whatever the case before I get into it, whatever the situation. If I want to invest in a company, I'll invest in a company. So, if you're looking at it's a different type of trade. So when it comes to leverage trading and trading indexes and Forex and that sort of thing, well, that's a different matter. And you also have to understand, you see, what you're asking here, do you trade fundamentally? There's a different level of fundamentals on shares. There's a different level of fundamentals on indexes, different level of fundamentals on commodities, different level of fundamentals on Forex, for example. Now, a good example of this is this geopolitics in the world. The indexes will be affected in a certain insane way, and they'll all be affected pretty much the same way. Whereas Forex, for example, you're trading one currency off against another, or one country off against another. So there's a balance to be found here. So if there's a geopolitical situation, the Forex balance is based on which country is going to come out better than the other when it comes to this, because if the US dollar is up against the Great British Pound, and they're both going into the same geopolitical situation, why would one have a bigger problem than the other? So you've got to look at the different fundamentals for the different situation that you're sitting with. So what I used to do with fundamentals, and I'm only going into this because somebody did ask, do I trade with fundamentals? And like I said, there's a long-winded answer to this. There's a lot of moving parts. I went through a stage in my career many years ago, it's probably more than 10 years ago, when I stopped worrying about CPI data, jobs figures every week, and all the news that you get that's like on a ticker, the ticker news that you got all day long, all the things that are happening, things that are moving around, moving parts in the economy and that sort of thing. That I threw in the bin. I threw it away. I used to sit and wait for that on a regular basis. Every week I knew that Thursday, jobs figures, Friday, jobs figures, non-farm payrolls, all that sort of stuff. And I would sit and wait for that. And there came an aha moment when I realized I'm wasting my time, because, you call it and you say, jobs figures are good or the jobs figures are bad, and you trade accordingly. And then it goes the other way and you think, why is it going the other way? And then it bounces back, and it just bounces up and down. And every single time, without fail, after trading it like that for years, you start to realize, but it always just sort of settles back to where it was. It very seldom breaks out or moves in one direction from that kind of news, because that kind of news is insanely temporary. Because if you consider things, most of the market, particularly the indexes, is based on companies that are growing in the market. Forex, on the other hand, is based on how the country is growing, but one country is played off against the other, as I just said to you now, whereas companies are growing in general. And those companies, like on the S&P 500, you've got the top 500 companies listed into that index. So if they grow, the index grows. That's not going to change because somebody announced that the jobs figures were 10,000 higher than last week. Those companies are still going to achieve the same result that they were going to achieve no matter what that situation is. That company's figure is not going to change because the CPI data is 0.1 points out of where it should have been, and it causes the market to panic or go in a direction. Now, every single trade or every single investment that you take in a company, or in every single trade that you take, in fact, every single time you take a trade in the market, your intention is as simple as you're looking for a positive result at some time in the future. It might be in the near 5-minute future. It might be in the 5-year future. Just depends if you day trading or if you're investing or what you're doing with that particular purchase. And you're looking at somewhere down the road, you're expecting a result from what you've traded, whether it be a negative or a positive result. And if you're investing in a company, 9 times out of 10, you're expecting some kind of positive result from that investment. So that's a fundamental trade. You're looking at that fundamentally as a future profit for your trade. How you took that trade might be technical, or it might be based on some information you've got based on that particular company or that particular type of situation. So what I do with fundamentals, like I said, on shares, I only look at fundamentals. But if I'm trading an index or if I'm trading a Forex or crypto or anything to that effect, what I would do is I would look at the situation for what it is. In other words, if I hear that there's a bank going bankrupt over the weekend, or I hear that they're going to put some legislation against cryptocurrency, for example, or I hear there's going to be some geopolitics, some kind of war, some kind of problem in the world, that will affect me. That will, my ears to the ground. I'm listening to that. I want to know what's going on. I want to, if something like that's happening, we need to know what's going on. And so, in fact, if you, I probably should have made my face a little bit bigger for you guys here so you can see me, but I'm up in the top left corner. Okay. Anyway, let's see. Like, if you have a look at the news, I mean, we can go to the news and you can pick things out here on a fundamental basis that are going to affect your trading in one way or another. So, for example, Etherum is surging and more companies want in. Now, in that one sentence, now whether you believe it or not, I mean, you've got to believe in the news that you're reading, that too. But it says here, Etherum is surging, but I'm not interested in that part of the news. What I'm interested in is, and more companies want in. And more companies want in might tell me that there might be some interest from other big traders that want into that product, which could push the price up. That's what you're looking at in that news article, fundamentally. Trump's trade loophole push risks 70% of China's export to US. You know, this whole thing between China and the US and tariffs, important. You've got to keep an ear to the ground on that. That can affect the markets. Trump-backed $500 billion Stargate II project is struggling. Okay, so here's something that, you know, there's a thought. You know, these are news articles that you might want to pay heed to. But what you do have to be careful of is sometimes the news will tell you something where you'll think Brent crude oil is going to go to $150, and they'll actually say that. But you're reading into the wrong part of the news. What part of the news you should be reading into is, oh, we're not going to be attacking anybody this week. Everything's going to go fine, and we're going to settle and have a peaceful week next week. That's the part of the news you should be looking at. And then you think, well, then oil won't go to $150, will it? It'll actually go down. You see, you've got to be careful what part of the news you're looking into. But the fundamentals that you want to keep an eye on are the bigger picture, the bigger fundamentals, not the little things. The little things are not important. Those little CPI data and jobs figures and things like that, they're going to move things around on a regular, daily, hourly, weekly basis. You're looking for the bigger headline, the ones that do make a difference. You know, like Indonesia targets foreign investment. You know, you've got to identify things that might affect what you are trading with the Forex or the indexes. And that's what will make the difference. That's what will make the difference to your fundamental side of your trading, because the fundamental side of your trading has got to be more out there, more scoped. But otherwise, keep most of your trading, in my opinion, what I do is I keep most of my trading as technical. I keep it as technical as I possibly can, because the more technical it is, if I look at technicals, I just want to make sure that that's what you guys are seeing as the technicals here. For me, every candle, what a candle represents is what the big money is doing, what the big players are doing, what the big traders are doing in the market. They're moving the money around. And effectively, if you stop seeing it as lines, if you stop seeing this as candles, and you start seeing this as money moving and trades and human beings, big companies buying and selling, then you might get a better picture of what's going on. And why are they selling off here? Because they've lost confidence at this level that this is going to go further, because they put so much into it already. Or maybe the money flow that was going in there, that could be just one company. That could be just one investor that's thrown all that money in there, because it's a lot of money. And they might just have run out of, or run dry. And that when that money runs dry, it just sort of falls over and starts coming back because nobody else is investing. Somebody else will come in maybe and start pushing it a little bit further. It's human beings. It's got nothing to do with charts and algorithms. That's all rubbish. You know, people see algorithms because algorithms obviously is something that's come in at a later stage in the world with computers and all this technology and AI and stuff like that. And now people think that the markets are run by artificial intelligence, and really they're not. They're still run by human beings. And human beings are still the ones with the money buying and selling. Artificial intelligence does not need money. It's people that need money, people that make money. And that's what's running the markets. Okay, so, okay. How did you get confident with executing your system aggressively or conservatively each day? I am either too conservative and miss a trade, or too aggressive and get wicked out. How to find the right balance? Great question. Great question. You see, the trouble with balance, with when it comes to aggressive or conservative, there is no balance. You are either a conservative or an aggressive person when it comes to risk. And it's got a lot to do with your fear. Now, that will change over time, because I don't know any trader that starts on their first day, unless they somehow have some kind of disconnect in their brain. But I don't know any trader who starts on their first day who doesn't start to shake when they start losing $1. You know, it's nerve-wracking to suddenly be losing money, and you're not used to it. And it can be really sort of, it can take over your body in quite a big way. So over time, you develop a threshold. You develop a different kind of threshold, and your personality determines along the way whether you are comfortable being aggressive or whether you're comfortable being a conservative trader. But when you get past all that and you find your, you know, there's so many, there's like yoga ways of saying this, you know, but I don't know the words, okay? But when you find that balance, and you find it and you realize, look, this is where I need to be, this is where I'm comfortable, and this is where I'm comfortable trading, then there becomes a more practical way of looking at it as well. And then you start to look at it from a practical point of view once you understand the strategy and you get the aha moment. Because then you start to realize it doesn't matter how much you risk or how big your account is. It's just numbers. What you got to do, though, is understand that you're going to lose some of those numbers, and you want to win some of those numbers, but you want to win bigger on those numbers, and then the overall picture is going to be a positive for you. Now, some people will say that, well, that makes you an aggressive trader. No, it just makes you practical, because now you've gone through the process of aggressive and conservative. You've gone through that process. You've found your balance. You've found where you're comfortable with risk, where you know where you stand and how quickly you'll take a risky trade or not. And you've figured out your risk, and then you go past that. And then when it comes to the money amounts, you start to realize that it really doesn't matter what size account you're playing with. It just matters that you risk it in a certain particular way, which is why I always say we risk 1% of the account. On my side, that's my idea of an account. Now, somebody mentioned to me in the comments the other day, but 1% of $25,000 is $250. You can't make much money out of that. Look, that's a $25,000 account. What about a $100,000 account? What about $1 million account? Does that change anything for you? Because on a $1 million account, suddenly you have to risk $10,000, and that changes the whole ball game, doesn't it? Or does it? Because it's the same thing. What you have to understand, though, is no matter what the size of the account that you've created, that if you take 10 trades, that's 10% of your account. And if you lose 10 trades in a row, suddenly you've lost 10% of your account. On leverage trading, 10% of your account can be quite expensive. So, risk is very, it's a subjective question, conservative, aggressive. You have to find out for yourself where you are centered and where you are comfortable. Is my thinking correct that moving stop loss to break even, once the trade goes into profit, may result in smaller profits being taken more frequently as the new stop loss can be hit sooner? Yes, you are correct with that. But I do it anyway because it makes my trade free. It just depends when you move it up to cost. I normally, if I'm targeting a $400 profit and I've got a $250 stop loss, it gets to $100, $150, I will move the stop loss up to cost because by then it should be moving on. And then I might start trailing it. And then when it gets closer to the take profit, I'll move the trailing stop up. But yes, you are correct that it does cause you to take all smaller profits sometimes. But, you're looking for that big one. You're aiming for the big one. And sometimes you'll get taken out a little bit earlier than expected. Things happen. The markets are alive. Don't expect everything to go perfectly. But you've got a plan. You're aiming for that plan. Best laid plans of mice and men, they don't always work out. The Titanic was launched and they said it'll never sink. And guess what happened? So, things don't always work out as you plan. But you try. And you want to work out a certain way, and you have a plan for it to work out that particular way. Okay, so yeah, I think I answered the second question. At what point would you suggest moving the stop loss? Yeah, I did say now. Okay, so Luigi, Shane. Hey, I haven't seen Shane for a while. Took me a long time to realize that the charts really don't predict what the market's going to do. Yeah, it took me a long time too. You can imagine I've been trading markets for around 33 years. Is it exact? I don't know. It could be 34. But like I say, it took me a lot longer than most of you guys to realize that the charts don't make you money. I was halfway through my career before I realized that all these systems and all these charts are a load of rubbish. But and that coming from someone who started with basically, because we had no computers when I started, I basically worked with these little railway lines, these little trend lines. That's what I had. I didn't trade with anything else. That's what I traded with. It's in the trend. And then I drew a line through the middle. That was my moving average. I mean, like if it's above, I'll buy. If it's below, I'll sell. I literally drew a line in the sand. And then our computers came out, and somehow or another, I got hooked into all those indicators, all those systems through many years. I got hooked into that. And I realized that it was just moving me around. I got caught up in those cycles of doom. This is why I make these videos for you guys, so you can learn from my mistakes. I got caught up in those cycles of doom, trying to look for the magic nugget and thinking, oh, there's something out there that's just going to make me money for nothing. How many times I went through that. And it took me many years to realize that it's not the charts that make you money. Wow. To think back, if I'd known that from the start, the ball game would have been much easier. But nobody tells you that. And the funny thing is, most of the pros know this because they walk into those jobs and the first thing they get taught is this, and they know it. The other thing to understand, you asked me about fundamentals earlier. as well. One of the important things to understand is the economic data and the jobs figures and the news on a daily basis on that ticker don't move the markets. The money in the country moves the markets, the reserves in the country and the way it flows and what it has to pay for and the debt and that sort of thing. That's what moves the markets around at the end of the day. You know, the country is just like a business. It has to pay bills. It has to pay its staff. It runs like a business. And that money flows around in the country and in and out as well. And that affects your economy and it affects the business. And that's what moves markets around. Not so much, we lost 10,000 jobs this month or this week. Oh, it's weekly. You know, that doesn't do it. Look, if the unemployment rate rises to over 5%, 6%, 7% in a country, then you should have a problem. Then there is an effect. Okay, that obviously there's an effect. But then there's an underlying effect from the reserves and the money in the country, obviously. Which is why I'm so surprised about the United States dollar South African rand trade. You know, that one surprises me in a shocking way, because this country's got a more than 60% unemployment rate, and that's for sure, no matter what they say. And the economy's bad. The country's looking rather rough in most areas. They can't even afford to fix the roads. They're full of potholes. Most of the railway stations are closed. You know, there's so many bad things going on, yet the rand is holding up. And on top of which, America has basically sanctioned South Africa and said, you're not getting money. And also, if you're part of BRICS, you're going to get higher tariffs and so on. And I just don't know how this is playing out. And the tax office is broke. And this boggles the mind. I don't know what's going on with this. It should be a lot weaker. Fundamentally, you see, so when you're looking at something from a fundamental perspective, like I am on that particular trade, then your mind starts to, you know, ask questions as to why it's not happening, because fundamentally it should be happening and it's not. So fundamentals can mess your mind around as well. You know, if I just looked at the charts and I knew nothing about the country, I'd think, oh, I'm getting out of that. It's short. It's looking terrible. The only reason I'm still in the trade is because I'm thinking, no, I'm fundamentally bought into that one. And sometimes you can get married to a trade. This is also a big issue. You know, it's happened to me a million times. Still happens to me today. You get married to a trade. You know, like I'm married to that trade. You're hooked on, because you've got this insane belief in your mind that it has to work out in your favor because of certain aspects in the market. And when it doesn't, it confuses you. And your brain struggles to compute, because your brain has worked it out, identified it, and said it should do that. Shock and awe when it doesn't, eh? Which is why you have a stop loss in place, which is why you put the stop loss there. And if it takes it out, you'll still be in shock and awe, but just accept it. And yeah, sometimes you're going to be wrong. You can't be right all of the time. If everybody was right all of the time in the markets would be a completely inefficient thing. There would just be a straight line, because everybody would be right. Who are you going to buy from and sell from if nobody's wrong? Now, interestingly enough, every retail trader in the market that exists thinks that they're going to be one up on everyone else in the market, including those guys that run 95% of the market with all the money. And that's another aha moment you've got to come to fruition with. You've got to understand that you're going to have to just ride the wave like a surfer and not try and beat them, you know, because you don't have the money to beat them 9 times out of 10. And not to mention they just got information way before you will ever have it. Okay, no. Bob, when you move your stop loss, do you just take into account how much you are up, or do you use a level or something similar on the chart? You know, I keep it as simple as Blue Mango. I literally look at how much I'm up. That's it. I'm comfortable if I'm at a certain level on my trade and I'm thinking, here I am, I'm targeting, I've got a $250 stop loss. Now I'm sort of like $150 up. So all I'm doing is I'm changing my stop loss from, let's say, 250 to 150. That's all I'm doing. I'm reducing my stop loss level to $150. I'm happy with that. It's quite a decent run. And if I get taken out of the trade on that, then I'm kind of like, wow, okay, I didn't lose anything, number one. And number two, that's quite a run. If it came back that far, it's probably going to go all the way. So, but yeah, you can look at levels. I mean, you can say, let me use the other chart for this because I think it might be a little bit better. And let's just go over there and see, because this is a good example of that. A little bit dark, but here we go. You see, you've got your trade, you've got your $250 stop loss. Let's say this goes $150 into profit, which it hasn't. It's $71 in profit, so it'll be about double. It'll be up here. I mean, that's halfway through the trade. And I mean, if I take this stop loss and I move it up to cost when that's up there, then I've changed my stop loss from 250 to 150. I get that. But it's in the middle of the trade. It's halfway through the trade. And it's 1-to-1 ratio at that point. And if I look at the situation, if that comes all the way back and takes out my stop loss, in all likelihood, with that kind of fallback, it's probably going to fall back a lot further. And it's probably better to let it go. So in general, if you go that far up with your trade, you kind of look at it and say, it's pretty good. What I will look at with levels, for example, is if, for example, it breaks past the prior high and it's going up in your favor, I'll be very careful to say, well, that's going up well. That's going to be a good trade. I might add to the trade, or I might even just follow it up in general. Push the take profit away. That might work out. That's a good time, for example, to move your stop loss up, because I mean, if it's a breakout and it's breaking past the prior high, or there's a new level that you see there that's really good, then obviously you can either add to the trade, move the stop loss up behind it, whatever the case. Then it really doesn't matter how much it is. But in general, what I'll do, if there's no real level, I'll just look at the amount and see how it's going as far as that goes. Keep an eye on that. Yeah. So for example, on this gold, this one as well, it has actually broken past the prior high, and I should have actually moved my stop loss up to cost, but I haven't actually bothered doing that. But I can do that. Where is my cost on this guy? I guess it's here. So what I can do, because it's moved past that and it's broken out, I could actually take my stop loss and move it up to cost, which is there. And there you go. Now if it comes back and takes me out, I get taken out for $6.50 and I accept it. That's as good as it is. Simply because it's broken past that prior high. Normally I would wait for it to get a bit higher, but there's no need. It looks like it's breaking out. And if it comes all the way back down to here, it's a bit of a monster trade anyway, and you might want to look at a new trade. You can do that as well. So you don't have to wait for a specific amount as well. You can look at those scenarios and say, it's time for me to move my stop loss. That way, you don't lose anything. This one, while it broke out, it is now, another pincer top. I got caught out by that pincer top. Hopefully we don't get caught out by that pincer top there and bring it back down again. Hopefully this is just a retest straight back out again. But there are levels here to look at. For example, these guys here. You want to look at that and see if it breaks through that trend as well. It's right on that level there as well. There'll be a lot of confluence there if If that actually fails there, that's going to be a lot of confluence. You know, if it breaks that and that, we're in trouble. Okay, so hopefully it holds there, and it goes back up again. Okay. Hi, Rob. Joined your live broadcast for the first time. Welcome. Good to see you on board, man. Yeah. FX Trader says, so the market needs losing traders to grease the wheels. Yes, of course it does. Imagine if everybody won. Imagine if you had an artificial intelligence that traded for everyone and it just traded the same. Where are you going to get your sales? You see, the market's made up of human beings, so you need to buy and sell. And these markets are made up so that people can buy and sell off each other. You know, if you're investing in a company, then you're investing into a company and you're investing into shares. But if you're investing in indexes, Forex, things like that, it's a buy and sell market, and human beings make up the market. So you need losers to have winners. Otherwise, you don't have a market. You need a market. You need a buyer and you need a seller. In other words, you need someone, even in a shop scenario where you've got a retail store and you're selling cucumbers. I mean, you need someone to agree with you that your selling price is good so that he'll pay the $10 and buy it. But on the seller's side, he's got to feel that he's selling it for $10 because he's making $4 on it. And it's got to be profitable to him because he bought it off of some other poor guy who sold it for $6. And there's always this buyer and seller thing that makes the market. And without the two, you know, someone's got to believe that it's worth selling it for someone else to buy it. So someone's losing out, someone's winning. And there's value in the market. So there's got to be sellers and there's got to be buyers. You can't have one without the other. Who are you going to buy it off if nobody's got it to sell it to you? And who are you going to sell it to if nobody's buying? And if you're selling it too expensive, then no one's going to buy it, are they? They're not going to want it if it's too expensive. And if it's too cheap, then everyone's going to want to buy it, but no one's going to want to sell it. Simple business, right? And that's how the markets work. People own shares and then they sell those shares. And then the reason they sell them, because they think it's a good deal to sell them. You wouldn't sell them if you thought it was a good idea to keep them, would you? If you thought it was a good idea to hold on to them and you're going to make a profit out of it, you wouldn't sell it to anyone. And then the buyer wouldn't find any shares to buy. Late night trading. How's everyone? I hope gold hold. How's it, Bruman? Sorry, man. Hope gold holds above 336. I think we stay bullish above that. Have you ever used volume before in trading? Yes, but volume I only ever used way back when, and I can't even remember how to use it. But all I used to do is use volume to determine if the move is good. That's all you use volume for. You don't actually trade with volume. What you do is if you see a move in the market and the volume is very low, the move is rubbish. It's just a fake move. But if you see a lot of volume and you see a move, then it's a valid move. That's what you're looking at with volume, nothing else. That's what volume tells you. Volume basically tells you if the move is good or the move is, not so great. It's just one person doing all the buying or something. So, yeah, but volume, good luck with it. I don't even bother with it. Why do you need that? And also, you don't use volume in Forex. You use it in indexes and shares, okay? It doesn't work for Forex. It's irrelevant in Forex. Volume doesn't work in Forex. Okay, short on DAX. Shane, are you short on the DAX? Okay. Have a look at the DAX. And yeah, looks like it. Not good news for our S&P trade, that, if the DAX is going short. But yeah, but the DAX almost caught me out the other day, Shane. I almost went short on it a little bit earlier on up here when it broke out of the earlier support. And then it came back in and it went up kind of interesting. But now it looks like it wants to push to the downside now. And also, let me just see. There does appear to be a low level here that it could, yeah. It's got to watch out for that level there. There does appear to be a support level there. Let's just put it in. Just for safety's sake, let's just put that level in. So there's a level there. Okay. That might hold it. That might hold it. Let's just see what that does, eh? Yeah, gold, I'm hoping it holds because I'm long on that one. So yeah, we'll see how that goes. Brew, how are you, brother? Doing well. I hope everything is going well. Yeah, okay, that's great. That's just chatting. Let's have a look at gold quickly. But yeah, you can actually take gold. I did it on the other chart, and you can draw a little line along here. And you got this long one here as well. If it breaks below that, then we're in trouble. If it breaks below here, then we might be in trouble as well. I think if it stays above this level and it just retests and goes back up, it might just be coming back to retest this level. Because remember, this is a strong resistance that it broke out of. It broke through. And a lot of people will actually wait for this retest before going long. Actually, we got in long a bit early. Yeah, it might come back, retest it, and then bounce and go up. So I think gold, we're kind of okay on here. It's not so bad. Okay. BTC 150 is next. Kind of agree with you, Bruman. I've been looking at it and thinking, there's a good chance this is going to get to 150. It might even head for the 200. Yeah, I see it's developed a level at 115 as well. And yeah, it's funny. I've always had, as you guys know, a thing about crypto where I've always said that crypto is based on fresh air and all the rest of it. I'll trade it, but investing in crypto is not my thing. I rather invest in shares. And the other day, my son sort of confessed to me that he invested in Bitcoin. He's made a fortune. And I look like the idiot, but he never wanted to tell me because he knows what I think of it. And good for him. Good for him. Well done. Yeah. Don't listen to the old man, eh? But I love it. Yeah, no, that's great. Yeah, no, I'm actually considering it as well now because it's too big to fail now. Only trouble is we're so deep in with it now. But yeah, it looks like a good investment. I was actually thinking it would get back to this level down here before getting in because it looked like it was going to come down, but it seems to have developed a new level at 115 here, which is quite good. Yeah, this is probably quite a decent trade. It's probably going to be quite a decent trade. Let's just have a look at the technicals on it, and let's just see. Yeah, that is, you know what? If it breaks through that line, we can just buy. It's going to go. Let's just see. Okay. Rob on gold, why don't you move your stop loss to just under the green line? Let's have a look at that. Gold. Dum, 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 dum. Oh, no, it's a bit close. I could, but there's a good chance it'll take it out. I'm going to just monitor it and see what it does, see how it goes. I mean, yeah, if it does break below that, I'll have a look at it and I might just bounce out of the trade. But other than that, I don't want to put the stop loss there and then you get one of those stupid spikes, like that. And then you get taken out of the trade for nothing. So that's why I keep a distance on the stop when I'm not ready to get out of the trade yet. It's just for those spikes, but I will keep an eye on it. If it does break below that, I will consider dumping the trade and see how we go. Yeah, I know Etherum. Etherum is getting a lot of... You see, that was in the news earlier where they said... you weren't here when I was showing the news. Let me quickly go there. Just to show you guys, you see here on the left, Etherum is surging and more companies want in. The second part of that headline is important, and more companies want in. That is a very positive sentiment, that. And yeah, I looked at that. That is quite the thing. And we can actually trade Etherum on these platforms as well. I think it's ETH. Am I right, Bruman? I'm not a big crypto guy, but there you go. Ethereum versus United States dollar. So there's Ethereum, and that one's heading to the upside as well. Looks pretty good, eh? Looks pretty good. Looks like a reasonably good trade. The Ethereum's going up as well. Just by the way. Just by the way. Yeah, no, totally. Yeah, we can look at both of them actually. Boom, 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 boom. No, ETH owns. Yeah, good point. It's moving. It's going to 4,000. XRP, good too, I think. Okay. So, which one should we buy, Bruman? Should we buy some Bitcoin or should we buy some Ethereum? What's the better buy here? I would probably say that Bitcoin is going to be the better buy. You buy both. See how it goes. But I think Bitcoin is going to do relatively well. It looks like it. ETH pretty high now. Don't make us buy high and sell low, Bruman. Breakouts can be quite important. And like I said, on Bitcoin, I was actually waiting for a bit of recovery. But I mean, if you get a breakout here, that can be a good buy. But on ETH, this is a bit of a tricky one because you're sitting more with a situation of, okay, where are we going to take this line from? Yeah, it is quite far away from there. And, okay, you can put a level here. Let's just have a look quickly. Always got to mark these things up because I haven't been looking at them. You can look at that level there. Comes into that, it might take some money and bounce back up again. Always be careful of that supermarket mentality again as well, eh? Whereas when things are expensive in the market, they're good. And when things are cheap in the market, they're bad. And unlike a supermarket, when you go in and it's expensive, that's bad. You know, it's the opposite way around in the markets. Normally, if something's expensive in the market, it can be pretty good. But I'm just marking Ethereum up there just for a quick look. And it doesn't look too bad. If it comes out of that, it might be actually quite decent. And then, of course, we've got the BTC as well. If it breaks through that, could be quite good. Or if it comes down to this 115, I might actually look at it for myself and see. Might actually buy it as well. Okay. Boom, 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 boom. The trouble with these runs on things like ETH is it's the same as the normal markets as well. We often get this in the markets where you get the news and you get this run. You get this run on big money, buying in, buying in, buying in. And then somebody pulls the carpet or the rug out and it comes back to where it's supposed to be, which is down here. So just be careful of that as well. That does happen in the markets. But what I'm looking at is maybe something more relevant, like the BTH might be a more relevant sort of trade on this scenario. Is my South African rand actually dropping off the sky again? Yep, it is. I noticed the little red up there. I was wondering what's causing that. Because it's not the S&P and it's not the gold. So it's definitely this guy. Okay. looks like I'm wrong on that United States dollar South African rand for now. We'll see what happens there. Okay. And then Shane says, I'd be short on the BTC at the moment. Yeah, on the BTC, I'm actually looking at it and thinking it's bearish at the moment. It's not a buy at the moment. I would buy it if it breaks out or, beats that prior high and breaks that level there, then you're looking good. But as it stands at the moment, it's short. You're right, Shane, totally. And it could actually just give you a red candle off of that resistance back down. What I'm looking at is let's see what happens when it gets to the 115, if it goes down, or if it breaks through that and comes down to the level where there's some money lying down here, which would be great at 112, because that would be a great buy as well. And then you can run it all the way back up. At the moment, it might actually rest around this 112 to 124. But it remains to be seen what it wants to do. But as we look at the picture at the moment, it's bearish. It's sitting in a bearish mode. It's not overall bullish on the long term, but on the short term trade on the 4 hour, it's a little bit bearish. It's just, below the levels, but you just got to wait and see how it plays out. I wouldn't go short on it either. I'm kind of like in two minds on that one. And as you can see with my United States dollar South African rand, fundamentals don't work, do they? Because I'm trading that very fundamentally with a fundamental view on it, and my fundamental view is totally letting me down. So maybe it's best that I just stay away from fundamentals and news. Yeah, probably. But I always get swayed by things. Boom, 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 boom. Bruman says, bad idea. That's what I say. I wouldn't be short on it either. I definitely wouldn't be short on it. I'm looking at it and saying short term it's bearish, okay? And I'm saying, but you are kind of going against the overall big trend, which is to the upside. And it's like swimming against the waves. So if you're a very, 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 very short-term trader, you could look at something like that. But in the overall big picture, I'm actually waiting for a long trade. I'm waiting for a buy trade on Bitcoin. And when I see something like that, that's what I do. I don't want to swim against the waves, but I also don't want to get in and just be at the end of the waves when it's just dying, the wave's dying, and I now want to get on the surfboard. That's not going to work, is it? So I wait until it's nice and strong and it looks good and it looks like a good buy, but I want to go with it. I want to go in the right direction, and I don't want to go against it. So I'll wait for the right direction, which is bullish, and I'll wait for a good bullish trade. Same thing I'm doing on the Brent crude oil. I'm waiting for a bullish trade. I'm waiting for a moment to say, you know what, Rob, you can buy this now. Now's the time to buy this. You can make money out of this now. And then I'll buy it because I believe it should go long. I'm just waiting for a good long trade out of Brent crude oil as well. I don't want to swim against the waves. I want to look for a good trade. And of course, Shane is a short-term trader. I know that you trade. Are you still trading on 5 minutes or are you trading on 15 minutes, Shane? US put 50% tariff on copper imports. Copper imports, how's the copper chart look like? I haven't looked at the copper chart for a while. I don't think I got it on this funded account, to be fair. I'll have to look for it. I haven't looked at it for a while, so I'd have to look for it, to be fair. I don't normally trade with copper. The reason you see, for me, I look at things that have got lots of liquidity in them, lots of movement. I know some people trade with platinum, palladium, and all these things, but they don't have a lot of liquidity, and I don't like to trade them. I like something that does have some movement in it at least, and that be the gold and the Brent crude oil and that sort of thing. And also, I don't invest in commodities because they're cyclical. They go up and down all the time, pretty much like Forex. But that's a trading product. You can trade it, but you've got to have lots of liquidity to trade with. You can't have poor liquidity to trade with. It doesn't trade well. Where the price doesn't move for half an hour. Hello, that's not great. But yeah, copper will we'll probably have a problem, but I don't think I got it on these charts. I got it on my cash account charts, but I'm not going to bring that up here now. Okay. Uh, 15 minutes now, moving up the time frame. We'll make most of the money on the 1 minute charts. Yeah. Yeah. You know, the thing is, it's not for everyone. And this is what I've been saying all along. You know, different people have different mindsets with the way to trading. I traded on the 1 minute, I traded on the 5 minute charts in the past, but, you know, it wasn't for me. So I moved on. And most older traders tend to move on and slow down. And we just slow down with our trading. That's all. But yeah, if you're looking for some excitement, you know, but you got to have the mentality to go with it. You've got to be strong. You've got to be able to do it. But yeah, you can make you can make a lot. You can also lose a lot, and you got to be careful of picking up the scalping mentality, because the minute you start scalping, that's when it goes pear shaped. Yeah, you see, like Shane, I know has rules, and if you stick to the rules, then you're okay. You got to stick to those rules. I don't know if you were here, Shane, when I mentioned this new ORB strategy that's going around. It doesn't work, where the guys are using the opening candle, or the candle at the opening, the first candle, and if it breaks above the high, they trade. If it breaks below the low, they trade down. And on the first candle at opening, it doesn't actually work. It fails on many occasions, simply because in many cases the market opens, goes one way, and then it goes back the other way. So it's actually a very tricky thing to do that. But yeah, it's the same as drawing a line in the sand for prior highs and things like that. It's not going to make any difference to it. Yeah, the ORB strategy, it's going around the internet at the moment. Everybody's, I don't know why they're calling it out there. Yeah, Shane, exactly. It's a low probability trade rather than a high probability trade. And the reason I say that is because in most cases I've seen, and I did my own research on these things, and I look at, and not just now, in the past. And normally when markets open, they tend to go in a direction and they tend to lose steam and they go the other way, or down and then they go up. You know, they don't take off from the start. That's because of all the orders that are lying in the market. The market has had orders lying in there overnight, and these types of things. And those orders have to get settled. And when those orders are settled, then the market comes to fruition, it comes to normality, and everybody starts trading normally, and it just falls back into place, and then it falls down, and it goes the other way. So yeah, the ORB strategy, just, I can't see how it's going to work. I just can't possibly see how it works. I've had a look at it. I've gone through it, and no, it's like Shane says, a very low probability strategy. They're basing their strategy on, I think they're basing their strategy on, it'll break out and it'll go in that direction, but it's less than 50% of the time that it actually breaks out. It actually doesn't break out very well. It normally goes against you. Now, you guys would have seen my title where I said why your trading strategy is failing, and I did discuss that at the beginning of the video. So if you missed that, you have to go back to the beginning of the video and watch again why your strategy is failing. But your strategy is failing not because of a system, not even because of the strategy. It's actually failing because of you, and because your mentality can't control the strategy. And this is why I say, for example, when Shane said he trades the 1 minute and Bruman said, I can't do that, that is normal. Some people have a different way of thinking to others, and some people prefer to only trade on the fast time frames, and others prefer to trade on slower time frames. And it's the same as the question I got earlier, where do you figure out that you're a conservative or a risky trader or aggressive trader? And that is something you figure out along the way, where you find that balance and you find what suits you the most comfortable position that suits you. And from there, you start to gain practicality in the market, and you start to trade with practicality. So it's not the market that's making you fail. It's not someone who's hunting out your stop losses that's making you fail. It's not some guy watching over your shoulder with some camera that's in your computer. I've seen guys with their stickers over their cameras and stuff like that. No, it's not that guy either. No, they're not watching you. In fact, they're so not interested in you that you probably don't even exist to them. We make up such a small part of the market. It's you. It's your mentality that's causing your failures or your successes. And I mentioned it in one of the members' videos earlier in the week, where I went over this, might have been Monday, where I said that over the weekend, if you want to look at your trading, look at how you did last week and say, ooh, I had a losing week last week, or I had, a winning week last week. Now go over your trading and say, what caused that? Why did that happen? What went right or what went wrong? And work out what you're doing that's causing that. It might be that you're taking your profits too early, or it might be that you have impatience and you're not able to sit on your hands, or it might be because you realize that you've had a lot of fear in the market and you've caused losses. And if you're on the winning side, it might be, because you just chose the right trades and you had a good week. Or it might be because you actually ran with the trades as you followed the rules, your own rules, and you did things the right way. Might be because you got out of your losses earlier and negated them and kept your wins and ran with them. But go back over your trades at the end of the week and sort of say to yourself, why did this work out and that not work out? What did I do wrong and why is it like that? And start asking yourself internal questions. It's not the strategy, it's not the system, it's you that's doing something that's a cause and effect. The cause and effect of whether you're winning or losing is you at the end of the day, not so much the markets. And then patience, you do have to be patient to win. Nick, I have done spread trades in the past. It's a bit awkward to show you here, but yeah, especially on futures, they're great spread trades. Trade one against the other. You can actually make a no-loss situation with futures. On CFDs, yeah, I've done some spread trades. I wouldn't do Brent WTI because they pretty much follow each other 100%. So you're not going to get much out of that. But you might get, for example, trades that normally are close to each other, like maybe US 500 DAX or maybe two cryptos or two types of Forex trades. You might even get Brent crude oil against gold or something like that. What it is when the two trades normally run together and then they pull apart, okay? And then effectively what you do is you say, well, I'm going to buy this one long and take this one short because they normally run together. And then they come back together and you take the spread trade. But then you also have to understand you're going to sit with drawdown on one and a positive on the other. And yeah, but it's great. I've done it many times before, spread trades, and it works well. You do have to catch it right, though. You do have to catch it right and don't get caught up in it because it can get quite complicated. And yeah, if you close the one and not the other, I found myself doing that. When did I last do a spread trade? Long time ago. And I found myself doing stupid things like closing the winning trade and keeping the losing trade. And then the losing trade gets worse and you negate all the profits or stupid things like that. If you take a spread trade, make sure you close both out exactly the same time, no matter what. It's the only way to take the trade and then you make the profit. Okay. Journaling is really important. Trading, I find it trading to be a very introspective thing to do. You've got to learn. Can you share a bit of your knowledge on correlation? You need to know. So, Ruben, yeah, yeah, it's quite interesting, how things come up. I'd actually almost forgotten about spread trading because I've done it for so long. And yeah, the more people come up with things, the more I realize I've pretty much done it all. Yeah, no, but yeah, if you want to try it, it's a bit of fun. You just put the two charts up and put them together and just see when they pull apart, when they pull across each other, or whatever. And it's just because they normally trade a certain way, you expect they'll trade that way again. It's as basic as it gets. That's the way the market works under normal conditions. What I find is if you can see things that have happened in the past and sort of figure out that they'll probably happen again in the future, you're probably going to get a good trade out of it somewhere down the line, and it's probably going to work out for you at the end of the day. I want to make sure that this trade's not whacking us or anything. It's only my fundamental trade that's whacking us, and it's looks like it wants to go all the way down. I never get this country, really. It's unbelievable. Ruben says it's time to do crypto. You haven't done that. I've had a couple of trades in crypto, but never invested in it. No, I've always had a firm belief that it's not a good investment. And I was wrong, of course. Yeah, no, totally. But yeah, no. Look, I'll trade anything, Ruben, as you know. I'll trade orange peels, lemon peels. I don't mind if it's tradable. I'll trade it. It's just the investment side that I'm more careful on. But yeah, on Bitcoin, if there's a trade, I'll grab it. There's no problem. If it looks good, I'll take it. Still Etherum, whatever. If it's there, I'll take it. It's just that I don't concentrate on it. I find it. Some people have asked me, how do you choose your trades? How do you take a bunch of trades, and how do you choose what you're going to trade and what you're not going to trade? I mean, effectively, I put out trade of the day to you guys every single day on the members area, sorry. But yeah, I put it out there, and there's a list there, pretty much a list that I follow. But I mean, look, if you look at all these are all, favorites, and I've got them on the others as well and what have you. If I look at my MetaTrader, it's impossible because there's just so many things on there. It's just impossible. But yeah, what I do is I kind of gravitate towards about 8 or 10 or 15 and just follow with that. So it becomes kind of difficult to now suddenly include Bitcoin into the whole thing, and all the cryptos and all the rest of it into the whole picture, because now you've got even more to look at. So yeah, I go through and I find the trades and I look at what's there. If there's a trade, I'll grab it. But yeah, these lists get quite long, and yeah, then sometimes I just clear them out a bit and shorten them off. Because you get caught up in different things and you tend to follow them around. But there are certain products that I never let go of. US 500, the DAX, gold, Brent crude oil. I don't trade WTI because Brent crude oil is the same. Bitcoin's new to this thing. Euro, US dollar, Euro, US dollar, Great British Pound, US dollar, Euro, Great British Pound, US dollar, Canadian dollar. These days use US dollar, South African rand, but it wasn't there before. But yeah, but like I say, there's some of these things you get married to forever. But there are times when they fall away. A lot of people ask me why I don't trade the NASDAQ 100 much. Generally because it's all built into the US 500, and the NASDAQ 100 and the Dow is basically built into the US 500. So I have a preference to trade the US 500. The NASDAQ is basically made up of the Magnificent Seven, so there's really not much point in it, and those I'm invested in anyway, so it's fine. Rob's logical crypto trading. I like that. Yeah, don't forget to short the DAX. Typo is working off my phone. Saying we all make mistakes. Short the DAX, eh? Yeah. What you got to look at with the DAX on the short is that support at 23,976, which is really close to the what would be your cost right now. The risk to reward on this is a little bit tricky. I'd actually like to see it break past that support, and then we can take a short on that. So that we can keep an eye on. Same as Bitcoin, where I'd actually like to see it just break past that level there. I prefer it when they break away. I don't like these trades where the risk is the target's so close that there's no reward and the risk is heavy. You've got to have a positive risk to reward. I'm just waiting for confirmation on that one. We shall see. Says the man who takes the USA South African Rand trade. Yeah. Okay, so comments today. It looks like Kafia is number 1. Rumen, you're number 3 at the moment. Who's number 2? Who's number 2 on the comments today? Let's have a look, shall we? FX Trader, goodness me. Wow. FX Trader was number 2. I don't know. That may have changed. Most commented, I hope you've all liked the video and given it a good thumbs up and see how we go. Our community is growing really, really nicely. And I mean, the channel's gone over the 15,000 subscribers last month. And next target, 100,000. Let's go. Let's get there. Let's build this up. It's a channel to remember. Turn this into something special. Really is fun growing a YouTube channel, I must say. Jane, when you started trading, did you trade on the lower time frames, or did you start on like day trades, or how did that work for you? Or did you actually start on these fast serving time frames? Yeah, Bruman's asking the same question. Did you learn to trade on those lower time frames, or did you learn to trade on slower time frames? It's interesting to know because, look, when I started, obviously that didn't exist. We traded on daily, and that was it. But yeah, I migrated towards those fast time frames at one time. And it was exciting times, but I found myself pretty much stuck behind the computer. And that was the problem. I didn't want to sit behind the computer all day. Yeah. I started on the lower time frame simply because it was cheaper than the higher time frames. A lot of people do that, Shane. It's actually quite interesting that you mentioned that. I think a lot of people get involved in the lower time frames because it's cheaper and easier to get into them, so you can trade with less money and try and make more money out of it. And but you can lose it all as well, obviously. I mean, you said yourself, blowing a couple of accounts, so you can lose it quickly as well. What you've got to keep in mind, guys, is when you are trading on the lower time frames, the information that you've got is not as reliable as the information on the higher time frames, because the information on the higher time frames is more solid. Obviously, there's more information in there, more people, and more money. But on those lower time frames, the difference is if you're trading with the same risk, let's say it's a $250 risk, on a 4-hour chart, you got like I'm just going to use this as an example. It's not exact, guys, so don't be having to worry about correcting me. But let's say you're risking 200 points on a 4-hour chart. On a 5-minute chart or a 1-minute chart, you're risking maybe 10 points for the same amount of money. And, 10 points can get wiped out in the click of a finger, whereas 200 points might not. So you're trading that much more conservatively with the higher time frames and relaxed and leaving the trades there to do their own thing. So what a lot of guys do on the lower time frames is to say, okay, I'm not going to sit in front of my computer all day watching charts and watching my eyes go mad. So what I'm going to do, I'm going to come in for 2 hours, trade off the open for 2 hours, and then I'm going to go and leave. And the trouble is the presumption that you're going to make a profit. A lot of guys say, I'm going to make $200 and go. And then they don't make $200, they lose $400, and that's where the trick comes in. That's where the problem comes in. So yeah, it becomes, you can't sit and draw down. You can't leave the trades on their own. You do have to trade them. Look, you can. You can do 5-minute trades, and you can leave them in place with a stop loss and a take profit and see what happens. You can do that. There's nothing wrong with that. But yeah, like I say, it happens much quicker. It happens much faster. A lot of people say, no, but I'll put less risk on the lower time frames, but then you've got to take many more trades to try and catch up. So, if you decide to trade 10% of your account that you would or 10% of the risk that you would normally trade on a lower time frame, then you've got to take 10 trades to make up that one trade, and that normally doesn't happen. Yeah, if you guys need that, you can. My email's on my account, guys, so you can get it there. Or the email that you guys can use if you need to contact me or ask me a question or whatever. You can send it there. Most of the emails that I get are people trying to sell me things to make my thumbnail, which I really don't think I need. I've kind of improved the thumbnails a bit, I think, on my own. Or get me to try and make the videos better, or asking me what my rate is. I don't know. I'm kind of like, yeah, I don't need all that stuff. I just make the YouTube videos myself the best way I can. I put a thumbnail on it. I put a title on it the best way I can. I try and make it as interesting as possible for you guys. And I don't think at this point in YouTube that I need to employ people to do things like that. The channel is paying for itself. It's looking after itself. It's not costing me anything. And I can give you guys information. That's the best way to do it. Yeah. Now that most of the emails are people trying to sell me stuff. It's insane. So here's the interesting one. Someone asked me, what trading app is this? Looks like CTrader and TradingView combined. It's two different platforms, dude. Okay, so I'm jumping between two different platforms if you are watching this show. And I've got others as well. Don't concern yourself with platforms. Platforms are meaningless to me. You know what a platform is? It's a place where you can trade. And I don't even need indicators. I just need an ability to draw a line and a block here and stuff like that and be able to take the trade. And I do like the fact that these new platforms have the ability to work out the risk for you in the trade and that sort of thing, which MetaTrader doesn't. That is quite annoying for me on that particular account, and that's my cash account. As the MetaTrader 5 is, you can't work out the loss. You have to do it manually. But these funded accounts and whatnot, these are great because you can mess around with that. They work it out for you. But yeah, I got a number of different ones. But yeah, the type of platform you get, don't worry about it, man. Just trade with price action. Whatever they give you, trade with it. It is nice to get a platform that gives you the ability to do this, where you can put the charts out like this. But the reason I do that is so that I can, have a video for you guys and show you the different products and what have you more than anything else. Otherwise, I don't Sometimes I just have the one chart there. I don't need more than that. Doesn't really bother me. You can trade on your phone as well. If it's got a phone app, that's also great. Don't worry too much about the platforms, guys. That's not important. What's important is the strategy for making money. That's what's really, really, really important. I've worked on so many different platforms in my career. So many different platforms. I can't even name them. And there were some that were really cool, some that were really nice. But trading is not about fancy monitors, screens all over the place, which we all do, and little fancy charting programs, all that. And the reason I'm bouncing between the C Trader and this one is because a few guys complained to me that they couldn't see the charts nicely. Because if you look at the C Trader, I'm going to try and do something with a color on it, I think. Let me just show you guys what I mean, because that would appear to be the biggest issue here. If you look at the C Trader, it's kind of, the oaks are struggling to see because of this logical trading behind here and the color and whatnot. So I'm going to look at the colors and see if I can make it a little bit more obvious and a little bit better if you guys want to see this. But that's why I'm bouncing, is mainly because of that. This one you can see a lot better. That's a kind of a trading view one. But yeah, further than that, for me, I can see it perfectly, but they're talking about on the videos and that sort of stuff. So this is better for training. It's actually probably nicer for training or whatever the case. That's what it's. Trading is lonely, so it's great to be able to chat to fellow traders. Yeah, that's the thing, David. What a lot of people don't understand is, everybody says, I want to go and have my freedom and do my trading and whatnot. And then they find themselves stuck in front of a computer trading and all by themselves, because not even your family understands anything about trading. Your friends don't understand that it's a real job. If you go and sit in the pub with your mates, or you go out with your mates and they ask you what you do, you say, well, I'm a day trader, or I'm a trader, or whatever. You'll see the look in a couple of the guys' faces thinking, what? What's that? Get a real job, Yeah, no, it is quite tricky. So, but you'll experience that. You'll get through that, and you'll find your ways to get around that. And then they start asking you financial advice, So, do you think I should buy gold? Or you'll get the whole story about how they bought gold, and they bought a whole lot of gold, and they went to some broker and they bought this gold, or they got this gold at home. Or, yeah, you've probably heard it all, because your friends have probably asked you, what do you do? Yeah, no, it's yeah, crazy stuff. I've traders talk already, but you need to grow, and then the accessibility is pretty important. Many of us are impaired, etc. I'm a degen trader. So true. Rumen, what's degen? Shall I put it out there, Bruman? Degenerate is what it means. We all are. We all are. We all are. That's where we come from. A lot of people will say to me, but hey, Rob, why are you doing that business, or making money there, or doing this or doing that? Because I'm a trader. That's what traders do. Traders make money. We're good at that. That's what our job is. Our job is to trade and make money and to buy and sell. That's what we love doing. We're all salesmen at heart, or business dealers, or whatever the case, I found it pretty good. I had a property business for a while, buying and selling properties and stuff like that. And people wondered why I was so good at it. Because I'm a trader. I buy and sell. I know how to buy and sell. Yeah, no, it's crazy. Yes, there was a guy, and Bruma's talking about a guy who lost 100 million in one trade. That's insane. But There was a guy who brought down Bearings Bank. What did he lose? I can't think of the amount. Was it 168 billion or 138 billion? Or I don't know. He brought the whole bank down. It was insane. Yeah, no. It's very easy to mess up in trading, guys. Very easy. Trust me. I lost a big account a few years back, many years back. And it was so painful. So painful. Let me tell you. I'm not even going to go into the figures, but that was painful. That was bad. But most of the time, I've been very fortunate in my trading career. When things went pear-shaped, I was on the upside, I was on the right side of the trade, and I was okay. Or I wasn't in, or whatever the case. But there was one time that it went bad. And that can be bad because, you know, the most difficult thing, guys, is not the loss or losing the account, or it's the embarrassment and the time when you have to go and tell your family that you've fucked up, and excuse the language. It's not easy, guys. Be careful of that. Yeah, it's serious. But most of the time, like I say, I've been very fortunate and very lucky. So, yeah. And that's when, you know, after that, you get the aha moment on how to trade. You think, why didn't I do that in the first place? Why didn't I have a stop loss in place? Yeah. I was one of the guys who didn't believe in stop loss. I was one of those guys. I thought stop loss was a load of rubbish. Thought you guys were crazy talking about stop loss. How many guys told me to have stop loss in the early years? I'll tell you what. You know, when you're younger, you're not clever. So in all those 33 years of my trading, you know, not all of them were great. Some of them went pear-shaped. Yeah. Yeah. You can lose 100,000 in one trade. And even more painful than that is, okay, so Bruman, you lost 100,000 in one trade, right? How's this for a feeling? There was one trade. It was a share. Okay. And I'm not going to mention all the names and whatnot, but on that one trade, I was 186,000 bucks up. Okay. And I was reveling in it. I was reveling in it. I thought, this is insane. And overnight, that thing went bankrupt and just crashed. So not only did I lose the profit of 186 grand, I lost what I'd invested in it as well. And that is painful. That is insanely painful. But yeah, you take it on the chin. But that was a long time ago. Very long time ago. That was an insanely long time ago. Yeah. It's very dependent on how much, like Bruman says, very dependent on how much you make and how much you lose, how much you've got in the background. Normally when you take big losses like that, you'll see it yourself, Shane. Well, I don't know. But in most cases, in my case, most of the time, when I took those bigger losses, it was because I had a lot of buffer. And I think Bruman will attest to this as well for his loss or whatever the case. You would have done that when you had a lot of buffer. It's because you become confident when you have a lot of buffer. When you have a lot in well, let's say in the bank account in the background, you've made all this money, and you know you can take the risk now. Where the problem comes in is you take that risk, you make the loss, you make the mistake, but now you've taken your buffer away, you've removed that buffer kind of thing. So the buffer's now starting to deplete. And suddenly your mentality or your psychology starts to change. Because now that you've depleted that buffer, things become more difficult. Because now you're scared if you do it again, you're going to deplete the buffer even further, and you're going to start eating into, what's effectively your main funds. And it affects you psychologically in a big way, because you do start to have fear. You do start to, because once that buffer is depleted, it's no longer there, and you start dropping into your funds, that becomes an issue. So generally it's caused by overconfidence. As Bruman said, greed, but overconfidence. You get overconfident, you make big mistakes because you've got a buffer. And you think, I've got the buffer anyway. But you don't realize that after you've done that, that it's going to affect you in one way or another, because then the buffer gets kind of wiped out and becomes difficult. So yeah, no, that's basically the situation. It's all about, you've got to learn to manage that risk properly. You've really got to manage that risk properly. And if you get overconfident, you've just got to get around it and move on. You will get overconfident. There will be lots of you out there that haven't had those wins yet. And when you do, and you do grow that buffer, I guarantee you will become overconfident. You will feel like, I've got loads of dosh, I can take this risk. It's just that when it does eat into that buffer, that's when it becomes insanely difficult. So yeah, be careful of that. Watch out for that. When you're making money, be happy about it and keep on doing what you always did. Be boring. Being boring is probably the best way you can make money. Do it the boring way, do it the slow way, and keep on just chugging along, and don't do anything too silly, because it really is easy to do those really silly things, let me tell you, and make those horrifying mistakes, because they're painful, eh? They're really painful. They hurt a lot, especially when it's real cash. Now I've told you guys before, for the new traders out there that have just done whatever course wherever, and I really need to put something together for you guys, and that you can watch for nothing and check it out and go through it stage by stage. But I just haven't got the time to do it right now. There's something for free, something you guys can go through. But yeah, you've done your course, you've done your demo, and you're all successful, and you've made loads of money. I mean, you think you're going to make loads of money because you're so good on the demo, and then you come home and you throw your hard-earned cash at it, or pension or retrenchment package, or money from the business you sold, or hard-earned savings, or whatever the case, and you lose it all. And that is dangerous, guys. You don't want to do that. It'll hurt you. So you've got to be careful of that as well. So that's why I grew to sort of warmed to prop firms and funded accounts, because it's a nice middle of the road thing, where you come off the course, the demo, and then you can go into the funded account, learn to trade with the funded accounts, because you are risking something. And then once you're confident there, then you can start playing with that hard-earned money that you've got, and you can start using that, because now you already know how to trade. What a lot of guys do is they get straight into trading, straight in, boof, head first, which is not wrong. But the trouble is, you take all the hard-earned cash and you blow it, and then there's no plan B from there. You can't get it back, and that becomes pretty difficult, particularly if you full time. If you do go to watch Tom, you can learn a lot from him. Just don't think that you're going to be him, okay? Because it's difficult to be him, all right? That's what a lot of people get confused with. He's got a certain psychology and a certain way of working in it, and he's good at that. But you've also, you got to get your mind around that. And it's not that easy, eh? the shorter the time frame, the closer the stops, the harder it is to make money. Yeah, Nick, that's it. So true. That's what I was saying earlier, is when you go to the lower time frames, you're suddenly risking the same amount of money on a 10 pip move rather than a 200 pip move. So your stop loss is 10 pips away. You could lose that money really quickly. Some traders have said to me, yeah, but I won't trade $250 there, I'll trade $25. But then, I mean, you're not making the profit that you want in the first place. You're only going to need to trade 10 trades for that one trade and so on. And yeah, just do the maths. Yeah, it's just easier to take the bigger trade with the bigger money and just let it go. If you feel like, oh, I need to make more money, then just risk 2% on the bigger time frame, if that's how you feel you want to do it. And also you can survive drawdown for longer on the higher time frames. You're often going to be in drawdown before you make the profit, eh? Yeah. Look, there's a lot of interesting trading channels out there on YouTube, wherever, okay? And as I've said 100 times, none of the systems are wrong. All of the systems work, and you can learn something from everyone. You don't need any of them to actually prove anything to you or anything to that effect. Every single one out there has got a way of trading, and you can pick out information from those guys that might suit you, that you might be able to put into your trading process. You're all out there looking for the magic nugget, the magic system, the magic whatever, which pretty much doesn't exist, but you're looking for improvement on what you're doing, and that's why you're watching even my videos. I'm not stupid enough to think you only watch my videos. Obviously, we watch all the videos, and you get as much information as you can. And what I always say is try and take a bit of a nugget out of each and every one that your favorites, the ones that you like, and try and collate something that works for you, whether it be to do with the time that you trade, whether it be to do with the type of trading, whether it be to do with the system, the strategy, whatever the case. Grab that golden nugget, take it and run with it and put it together and create your own system. You're never going to be able to carbon copy any one trader. You're never going to be able to say, I'm going to only use that system and trade that way, because there's always going to be things in the way that you work and how you work and maybe what time you work or wherever you work, the type of things you work on that are going to affect your way of trading. And the best way to get around that is to find all the nuggets out of everyone else that are going to work for you. That you can have one mentor in the world and say, that guy mentored me and he showed me how to trade. You're still going to take information from other people and put it into your trading, because things will make sense to you as you go along. That's the thing with trading. It only starts to make sense at a later stage. It doesn't make sense immediately. And like I say, when most people start trading, we all believe that the charts are going to make us money. We all believe that the charts have somehow got a predictive capability, which they don't. And you believe that a win rate's going to make you money. That just everybody does, okay? It's not unique. It takes a while for you to realize that that's not the case. And then you start working around that, and then you start taking information from everyone else. But now what you can learn from every single, for example, YouTuber that's showing trading out there, you can learn systems. You can learn the best high probability systems and trading systems and whatnot. So for example, going around the internet at the moment, as we spoke about earlier, the ORB system is going around and it doesn't work. But Shane's already checked that it doesn't work, and I'm telling you already that it's not a great system and it doesn't work. You figure that out for yourself. You figure it out. You look at it and you think, well, that's great, but when I look back on it, this system is not really going to do the trick. It's not going to give me the high probability trade. It's rather going to give me a low probability trade. And then you move on from that and you look for stuff that it's more relevant to your trading. What I would recommend, though, or say, I don't recommend anything, what I would say is, if you're looking at trading with price action and a strategy like we talk about, try and find other like-minded traders that trade a similar way so that you don't go too far off the beaten track. Try and stay on the same road, at least stay in the same pattern, and then sort of tweak that the best way for yourself and the way you can along the way. And unfortunately, there's a lot of nasty people out there who talk bad about other traders on the market and whatnot out there in the YouTubes and the guys that are out there that are selling courses and whatnot. I never do. As far as I'm concerned, everybody's got something to offer. Everybody's got good information, and there's information, there's nuggets out there that you can grab, that you can take, that will help you with your trading, and that'll even sometimes even teach me something. Like if I don't watch much of the stuff, but if I do see something interesting, I'll have a look at it. And sometimes it's something that even I didn't know. And I think, wow, that's actually quite interesting, For example, that ORB strategy, I didn't know about it. So I watched it, I looked at it, I went back, I checked it out. Okay, I looked at it and said it's rubbish, it doesn't work, it fails, but at least I looked at it. It's interesting. It's interesting stuff. Somebody's come up with something. That's great. Just remember that the charts don't have a predictive capability. That's all you've got to remember. Just remember that the charts are there to pick your trade, give you the high probability trade, and you can move on from that. And then you just got to manage your trade from there. Like I said, one of the guys commented that he's really watches my videos and he's definitely following my strategy. He's just changed the system one way, and that is he tosses a coin when he takes a trade, and then he manages the trade, which is fair. Okay. Val says too much information is noise at some point. Totally agree with that. You don't want too much noise. I agree. Boom, 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 boom. He's very good, but he does spend 12.49. Shani, you're talking about Tom spending 12.49 hours a day. He actually does a lot of research. Okay, he does an insane amount of research on his trading. And he doesn't, you just see the guy trading. You just see, I'm trading. But he spends hours and hours and hours working out these systems for himself, okay? You're not just going to walk in there and do exactly the same thing. He actually tweaks the system on a regular basis, looks at the markets, which way they're going, what they're doing, and has a look at his system. So that's the way he trades. I did have a look. I do know who he is. And I know he's a really good trader, but you do have to understand that you're not just going to walk in and trade the same way easily. You can try and copy him best way you can, but he does a lot of research into that stuff. And David Paul was an insanely good trader. I know him. Dr. Paul was fantastic. He actually lived here in South Africa for a while. And yes, he had an influence on me as well, David. Okay. Another interesting perspective to check out would be from the scruffy trader. Shane follows him. Shane says, was my first mentor. Nice, learned a lot from him too, Rob, Tom, and so many others. Without slippage and commission, it's easy to find a profitable trading system. You need to be a good broker. Ruin, when did Dr. Paul died? About a year ago, 2 years ago? I'm not sure. Yeah, he was my age or a little bit older, I think. He was a pretty hot trader. He knew his stuff. He used the Wyckoff system, what he called the Wyckoff system. I remember that now. It's very much based on what we do, but it's a little bit more complicated. Yeah, but yeah. 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 Somebody mentioned to me about commissions or costs for a trade or whatever, and they were quite high costs. I was like, wow, that's a lot of money. If you've got a broker that's charging you that much, look for a better broker. Trades shouldn't cost you that much. But anyway, yeah, that was an insane amount of money. Okay, guys, that's it for today. I'm going to head on my merry way. I'm going to leave you guys all on your own, all by your lonesome, trading by yourselves, with no one to talk to. Terrible. Yeah, Blue Mango. I don't like Wickoff much as well. I mean, I did try to use it, and I was like, this is too much work. Totally agree with you on that. Okay, so guys, I'm going to head on my way. I'm going to leave you to it. And it's been fun again. I enjoy being with you guys. It does keep me going. But yeah, there is a point where I have to move on and do my things. So yeah, thanks for being here. Thanks for watching. It's been fun having you guys here. And I'll see you guys on Thursday at 2 again, or GMT 1400 plus GMT plus 2. But yeah, thanks for being here. It's been good having you on board. I've loved it. I've enjoyed it. As usual, I've enjoyed it. Man, I never thought that I would enjoy making YouTube videos as much as this. And I had an inherent fear of starting live shows. And I think we're on episode 88 of the live shows. So that just shows you how much I'm enjoying it now. It's good fun. Guys, thanks for watching. And I'll see you guys pretty soon. And keep your feet on the ground, reach for the sky. Cheers. Ciao.